This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back, everyone, to the Research Talks podcast here from Stockbox with Alan Green and Dan Flynn. So, we're recording this on a Saturday because I think, Alan, you've had a bit of a holiday. How have you been? How was it?
It was great, thanks, Mark. But yeah, we had a trip up we just stayed up in Witney in Oxfordshire, which is a bit of a hidden gem, actually, because we have an elderly dog who won't stay with anyone else. We take him with us everywhere, so that means we can't travel abroad. So what we tend to do is do 3-4 day breaks in the UK. So yeah, Witney in Oxfordshire, we did Blenheim Palace and Woodstock, which was lovely. Went to travel around all the airfields there because I'm a bit of an airplane buff, and went to Brize Norton, although I hasten to add we had nothing to do with the terrorist attack there, which was, as we said earlier, Mark, a terrorist attack, quite rightly. And the perpetrators should suffer the full force of the law, in my book, but there we go. And also RAF Fairford, where I promised Annie, I said, yes, the American aircraft operate super fortresses, and they offer they operate the Rockwell B1, or known as the Bone. That's the colloquial term. And we got there, and there were absolutely no aircraft there at all, so it was a bit of a wasted trip anyway.
Well, I've also had a wasted trip to RAF Fairford because, of course, that's where the International Air Tattoo is hosted every year. It's never been cancelled, ever, except the 1 year that me and my friend, who wanted to go for it for a long time, when we were 16, 17, we finally managed to get down there. And guess what? It was cancelled due to bad weather. And we were just talking earlier about tenting, weren't we, and how the joys of camping. And yes, we were in a tent, and it was absolutely foul. We went home a bit early, and we did get to see some aircraft leaving. But yeah, the whole show was cancelled. So first time to Fairford, and I've never been back.
Well, actually, the signs for the air tattoo, it's on, I think, this weekend. So so we saw all the signs, but obviously, timing-wise, we weren't staying on. But it was odd. It was the place was almost deserted, which I'd have thought that, given the preparations and the reasonably good weather forecast, there'd be plenty of activity. But yeah.
Well, one thing about being on away during the course of this week is that you will have probably been aware of, but missed the huge pullback. Of course, Dan and we've been following that in the treasury, the Bitcoin treasury stocks. We only spoke about them, I think, last week, and how money was flooding into that. And we've seen a huge pullback, may even call it a rug pull, which is, of course, a crypto term there. So it seems like some stocks, some companies now are actually trading like, I won't swear, but, meme coins, there's another word for that. I don't know. I mean, I think I've seen some memes going around. People are like, this is nothing. Crypto boys are used to this kind of movement. Yeah. I don't know, but a lot of volatility in those Bitcoin treasury stocks. I don't know, Dan. What do you think? You've been watching it as well. Do you think it's all over, or do you think there's still some wind left?
I mean, like you said, I've been spending a lot of time this week just watching these stocks going down. I think we'll have to wait and see if it's just a correction or if they'll continue to advance once again. I mean, I hope they do. It's been great to see some real life back in the markets. And fundamentally, I'm not sure what's changed. Like the models these companies are following certainly haven't been altered. It's not like Bitcoin's collapse. It's actually strengthened, if anything. So yeah, the next few weeks will be really interesting. I mean, Coincilium, one of the main ones, began a bit of a reversal in
Dan's
the last.
Just gone quiet.
Bit of a reversal,
Yeah, a bit of a reversal in the last 15 minutes of trading on Friday. So there could be some green shoots there.
Oh, yeah, there was a bit of a reversal, wasn't there? And I did watch a podcast with the Smarter Web company, and they're not slowing down. I think they're just going to continue doing what they're doing. I think he even met with Michael Saylor, he said, and he was quite bullish on everything that was going on. And, of course, Binance, soon to be, I think even next week, the London Bitcoin company, again, Huey's not slowing down there as well. So it does just continue. I mean, from a technical point of view, yes, it was clearly very overbought. The RSI was very fried to the upside, so a bit of pulling back and cooling off was needed anyway. Yeah, it's a matter of wait and see, isn't it? No one can really predict these things.
I think once these companies actually acquire the Bitcoin and bring it into treasury, then they're directly aligned to the Bitcoin price, and then the movement, I think, will be more sustained. It'll probably track the Bitcoin price, but of course the company can announce its intention, but until it can actually demonstrate it has the Bitcoin in its treasury, then it's just speculation. But
I agree.
I think the acid test is the acquisition. So show the market that you've now got Bitcoin in your treasury, and it's a fact, and then your share price action will start to align itself to Bitcoin. I believe.
Yeah. I think their performance at the moment is based off their execution, and once they reach a certain amount of certain size of treasury, it will begin to follow the Bitcoin price more, just like you said, Alan. I think at the moment everyone's looking at these things with very short-term focus, aren't they? Because they've been moving so quickly. But perhaps it's worth putting Telegram down and taking a bit of a longer-term view.
Maybe. And I did notice, is it Texas, wasn't it, that passed the Strategic Bitcoin Reserve Investment Act, so it allows the state to invest in Bitcoin. And then I'm sure J.D. Vance said something about it recently. What did he? Has anyone seen that?
I know he's taken a very pro-crypto stance.
Or was it Trump, actually? Trump made some positive comments about Bitcoin. It wasn't just Vance. It's great for the American dollar, and we want to support it. This is it. We want our fellow Americans to know that crypto and digital assets, particularly Bitcoin, are part of the mainstream economy and are here to stay. So that was the words.
Yeah, that's bullish.
Yeah, absolutely. And I did like what Darren Hazelwood did, actually. You presumably saw that news with hedging the real assets against crypto, because there you have got like the best of both. You have got real assets and you have got digital assets. So if you're a little bit skeptical on the digital side, well, more like the hard assets, then Darren's kind of mixed that. And interestingly was the fact that he said that he can get favourable terms to borrow to fund the real hard asset projects with the Bitcoin held in treasury. So I think that's really good as well.
I think it also following on from that, at the start of the week we had a conversation with somebody about the tokenization of assets in the ground. So if you've got a JORC resource in the ground, there's now a plan by some companies to actually tokenize that asset in the ground. So it can then be sold off as a token, as a virtual token. So I think it's
okay.
I just the way the market's moving, I think the process of aligning yourself to the Bitcoin price is a very positive thing. And indeed, also this week, the company we do a bit of work with, TrueSpine, also announced they were adopting a Bitcoin treasury policy too. Now, this is a company; it's a medical device company. So the fact that it's moving into that particular sector too, I think is an encouraging sign. So. Yeah.
Well, we've said for a long time, haven't we? A lot of the money is perhaps in the crypto and the tech, and that's perhaps why the mining sector's seen, despite we can see the fundamentals are adding up, stacking in big favour of the mining sector. Money is just not sort of finding it very sexy. Maybe, as I said to Darren, if you can start making mining sexy again by attracting some of that tech money, that crypto money into hard assets, then I'm all for that. I think that's a great little mission.
Yeah.
But we are going to talk about, of course, mining companies. We're going to focus today on Nostraterra. Now it's called Buccaneer Energy, so it's a new ticker, BUCE. Dan, you've been doing some research on that. I did interview Paul Welch on the name change. Got a latest on their production figures. And I've always kind of liked the story. I know it's tarnished with some history that people still keep harping back to, which, I tend not to try and look back because I don't really see the point in dwelling on the past, focus on the future, and I think Paul's got the right approach here. But give us your take on Buccaneer Energy.
Yeah, definitely. I thought your interview with Paul was really interesting and did a bit more research on the back of that. And I think there's a decent argument to be made that very little upside is currently being priced in at Buccaneer's current 1.15 million market cap. So just to quickly recap, Buccaneer is an oil and gas exploration and production company focused on Texas in the Permian Basin. And over the past year or so, it's put in place a new strategy focused on stabilizing what it already has and positioning for growth after those historic sort of issues that you alluded to there, Mark. So this is involved divesting of core assets, and most significantly, it's involved reactivating dormant wells and upgrading infrastructure at its existing 100% owned Pine Mills acreage in West Texas. So this workover program's now complete. Costs are down, with production profitable down to $25 a barrel. And the company is now profitable at the operating level, with production currently at around 125 barrels of oil per day. So in your interview, Mark, Paul said you were there or thereabouts right with your calculation of free cash flow currently at $1.2 million to $1.3 million a year.
Mm-hmm.
So that alone pretty much covers the company's current valuation, or at least a large part of it, once you also factor in the remaining debt on its balance sheet. But I think it's important to realize that this is just the start of the story here. So first of all, current production is currently lower than it normally is, owing to unseasonably frequent thunderstorms at Pine Mills. I think in normal conditions, Paul said production should be around 140 barrels of oil per day. So that's already a lift there. Next, Paul said there's potential to eke some more production out of the existing wells at Pine Mills with a sort of low-cost investigation into the production potential of the various horizons each one passes through. So more low-hanging fruit there. Perhaps most notably, though, there's a very clear opportunity to increase production over the near term at the Falk area. So Buccaneer holds a working interest here alongside a partner who holds the majority. And the two companies have already agreed on a location to drill the Falk 3 well, where they are targeting 200 barrels of oil per day production. Paul said net, that would be around 40 barrels of oil per day to Buccaneer, with funding of its share of drilling costs coming from cash flow. And with spudding anticipated for end August, early September, there's a clear chance for the company's production to increase significantly in a matter of months. What's more, with Paul remaining optimistic that another well, Falk 4, with a similar production profile could be spudded by year-end, subject to the approval of its partner, that production profile could increase even further still over a pretty short time frame. So you add in another 80 barrels production to what Buccaneer already has, and the company's current market cap starts to look increasingly conservative. You got to remember the profit margins on these barrels are extremely high. Costs at Falk are just $5 a barrel, I think he said. So I think there's an opportunity for a near-term re-rate on that basis alone, but the longer-term opportunity is also interesting here. Paul spoke about Buccaneer's aggressive efforts to pick up more producing assets on the cheap while oil prices are where they are, and the company's shooting for 5,000 barrels of oil per day production within 5 years. I mean, should it do that, then the potential valuation upside from here is huge. Of course, that's far off at the moment, but if we can see Buccaneer continue to demonstrate delivery of its plans to incrementally increase production over time, either by increasing production at its existing assets or taking on new ones, then perhaps we'll see the market begin to add more value to that 5,000 barrels goal. And, if you're an early shareholder, that could potentially result in some significant sustained upside over the longer term.
Yeah, the 5,000 is a nice target. It's very ambitious. As you say, it's quite a long way off. But, it's nice to have something to shoot for, isn't it? And I think with the spudding of those new wells, that's obviously quite exciting as well when you're going to, it's like drilling a hole, isn't it? But, the spudding of a well is quite exciting. So we can look forward to that sort of as we head into August there, if you're a shareholder in Nostra Terra. And then, like you said, he's on the lookout for other acquisitions as well, as you say, with the cost being so low at the current wells, only $5 in some cases.
Yeah, crazy, isn't
Picking
it?
up some assets on the cheap. Did you see the SP Angel note? I think came out with a target of, it was conservative actually, because most of these research notes are ridiculous, but I think it was
Yeah,
0.06, so
really.
just over 3x from now actually. Um,
Well, that's good. Yeah.
yeah,
And
yeah,
was that on the basis of the production being added at Falk?
yes, yeah.
Yeah. Okay. There you go. Yeah. No, it seems like it's just waiting to move up, doesn't it? They've done a lot of work to get things stable over the last couple of years, and hopefully now the company can have its moment.
Exactly. Yeah, and I sort of like the new brand as well. It's got a very American kind of
Mm.
shield as a logo. Not what's in the name, what's in the logo, but it's quite nice. They've got a new website to go with it. So yeah, I think it's quite a nice one, and it's cheap. It's still quite cheap. So
Yeah,
as you said at the
absolutely.
start.
Mm.
Okay. Well, thanks for that, Dan. Thanks. Good to get your take on that. So,
Yeah.
Alan, then we're going to talk about another project that we've talked about quite a few times. It's pretty significantly undervalued in everyone's opinion. Is of course Cadence Minerals with the huge iron ore project, the huge plant, the huge port, the huge train line they've got. I mean, I haven't heard much from Kieran recently, but maybe you have a bit more information on what's going on. So, what's your take on Cadence?
Yeah, well, Cadence is the perennial mystery that is so substantially undervalued because of the sheer size of the asset that it has a stake in. So, just a bit of history: the Amapa Iron Ore project, which is Cadence's flagship asset, is in Brazil, northern Brazil. It incorporates a mine with a JORC compliant mineral resource of 276 million tonnes at 38% Fe iron, and a proven and probable ore reserve of a further 195 or 196 million tonnes at 39 or just under 40% Fe. The, the company has worked to bring the project back online. The fall in the iron ore price during 2013 onwards, plus a poor collapse at Santana, put the company and asset into administration. And Cadence basically bought the asset out of administration from the local authorities and has worked with the team there to rebuild and bring everything back online through the local company dev. So we now have an asset which is very close to restart. It's very close to having the infrastructure completely rebuilt. And this is, as I said, it's a huge mine with this huge asset under the ground. There's also a railway that is part of the asset. That railway runs 130 kilometers down to the port of Santana, which the company also owns, and that port has already shipped stockpiles of iron ore tailings and has generated money from those tailings, and it's sold into a world market. The product is very well recognised and very well thought of, so the resale value is well established. But of course, as with anything of this scale, the process to go through to recommission the mine is huge. It's very detailed. Permits have to be applied for, and that they're working with the local government there to do that. We're now pretty much at the end of the DFS process, and this week Cadence announced that, well, on Friday, in fact, yesterday, that they announced that they had a plan to accelerate production at Amapa and to basically bring the Azteca plant, which is the actual operating plant at the Amapa mine, back into production. Now they've gone through various tests through the PFS process and the DFS process. They've gone through tests to look at how they can produce green iron ore, and they now have a system in place. And there's, if you look at the social media from yesterday that we put out, and also Cadence put out, there's a diagram that shows that process in operation. So, as with anything of this scale, it requires an awful lot of money, and Cadence have raised money at various stages. Cadence themselves now have a 35.7% equity stake, which is worth, and they've invested some 15.5 million. Bear in mind, the old mine was valued when it was owned by Anglo American in 2012. It was valued at $600 million on Anglo American's books. So you can just do the approximate math there with Cadence's stake and arrive at a value. And indeed, this is what Edison did. Edison Research on several occasions. They in late last year they valued a mapper alone at 23.9 pence per share. And Cadence has other assets, which I'll come to shortly. So you have this massive disconnect between the share price at the moment, which is currently 1.6p, gives Cadence a value of 4.7 million against that valuation. But of course, I think given the torrid time that mining stocks have had, it's going to take a restart of the operation and further cash generation, I think, to make investors sit up and take notice. And indeed, that is what Cadence announced on Friday. So the plant is ready to be recommissioned. It requires final installation licenses to be issued. Those are estimated to take another 3 to 4 months. And then we've got a period after that, which will take about 3 months to restart. So we are realistically looking at the end of this year before that restart is going to happen. But once it does, the plant will be able to produce 380,000 tons every year of 65% iron ore concentrate from the float cell feed system they have in place. It's going to require an investment of just a further $3.5 million US, which is not a huge amount of money. So you can see how close we are to restarting production. Once it does that, at current benchmark prices of $103 per ton, the operation will deliver an estimated margin of about $24 per ton. So that's quite a healthy margin. That's after it's shipped out of China, which will be the consumer. And of course, that will generate cash instantly. That cash, or the free cash flow, will support the further expansion of the project and also the export of the historic tailings of some 28 million tons that are there. So it was very much a pivotal moment to get to this point where the process can be restarted, or there's sight of that process restarting, because it has taken so long. And indeed, I think you'll see some more media out over the next few weeks from Kieran detailing this process, and obviously giving some firm timelines to investors, so we can actually see how it's going to come to fruition going forward. In addition, the company has a number of other investments. It has an 8.7% stake in Evergreen Lithium, which is ASX listed. Evergreen owns the Bino project in Central Australia, which has multiple lithium pegmatites and also extensive gold mineralization. And the geology on that asset is contiguous to Core Lithium's Finniss project, which has a resource estimate of some 30 million tons of lithium oxide. Also, it has stakes in the Sonora Lithium project, Mexilit and Megalit in Mexico. This is owned by Ganfeng Lithium, but there's currently litigation going on with the Mexican government, because, of course, the Mexican government have decided to take back all of the assets and bring them back in house. So that's currently still going on. We've seen this before with other companies, so that's still some way from resolution. But just consider that Edison valuation, 23.9 pence per share, and that's for a mapper only. Forget all of the other assets that Cadence has. And here we are currently sitting at 1.6p. And obviously, when the company's tried to raise money to get the show on the road, it has just raised another 400,000 from a single sophisticated investor to fast track that process and complete that process going. And Cadence are working with partners to bring partners in to raise the additional money. That's $3.5 million required to restart the plant. And we will have a lot more news to come, I think, in the next 3 to 4 weeks.
That is quite significant then, because I said it had been a bit. Well, I'd not seen much coming out, and we haven't spoken to Kieran for a little while. But 3 months they're going to get the plant running again. That's significant. Because they were waiting for something very important, weren't they? Was it what was it?
It's the permits and the installation licenses. So of course you've got the operating permits, and then you've got the various licenses required to install and, if you like, I guess, tick. Yep, that's okay. That's fit for purpose. So those licenses have to be issued, and that's an exhaustive process. So they're estimating 2 to 3 months for that. Once those have been completed, then of course all the final checks and balances, guy running around with an oil can, checking everything's working, that sort of process. So you've then got another few months before the process can restart, but that process can then restart. It'll generate cash from that iron ore concentrate, and then that cash that's generated will then go to restart other areas of the plant. So the plant will be cash generating, and will then sort of start to develop the rest of the asset.
Okay, well that's good, and that 3-month timeline takes us nicely through the summer into the September timeline. Hopefully, when production gets going again, as you say, and in the RNS it says that the capex is obviously, well, it's not too bad really at 3.5 million, is it? The pre-production capex, and that's been being discussed anyway with an offtake partner.
Well, $3.5 million set. I mean, this is you've seen the market, but it's just huge. I mean, it's massive.
Yeah,
I mean, that railway from Amapa to the port is 135 kilometers. It's just enormous. So and Cadence owns 35% of all of that. So that gives you some idea of the scale of what we're dealing with here. But obviously, when something's so far away, you can't put a value on it. And it's investors looking to say, well, it's jam tomorrow. I think I'll go into Bitcoin treasury to get a more immediate return. But once this is up and running, once we get to that point where they switch it on, production starts, cash starts to come in, then you've got a different beast altogether.
Indeed. Well, thanks, Alan. That's a really good update, actually, on Cadence. I'm pleased that we talked about that today. So thank you. Lots to talk about as we go in the end of the summer then on that, it seems.
Yep.
Right, so Great Southern Copper, Dan. They've been busy as well. Again, not spoken to Sam Garrett. These CEOs are too busy to talk to us, I think.
Yeah, I think they've got a lot going on. So away from all the drama of the crypto space, Great Southern Copper has had a pretty interesting week. So I've covered this company a few times on here before. I'm actually also a holder myself. And after a pretty long period of trading pretty much completely flat, the company has begun generating increased interest over the course of the year so far, driven primarily by successful exploration results from the Mostaza mine. So Mostaza is part of Great Southern's Cerro Negro asset in northern Chile, over which it holds an option for 100% ownership. It historically produced a considerable amount of copper and silver, as well as some gold, but Great Southern's work this year suggests much more potential than has so far been exploited. So first, assays from the company's first phase 1 drill campaign consistently delivered significant intersections. They confirmed high-grade mineralization was continuing at depth and along strike from the historic mine and open in all directions. And importantly, they also confirmed that Mostaza has the potential to be a very high-grade and very high-value copper-silver deposit. So Great Southern quickly followed these with phase 2 drilling, targeting extensions to known mineralization. And this week, the company released the final assays for the work. So long story short, the results were once again very encouraging. I won't go through all the highlight intersections because there's a lot of them across this week's RNS and the first batch that was released earlier this month. But we're talking up to 10.5% copper and 672 grams a ton silver from depths of less than 100 meters here. In fact, the CEO, Sam, referred to them as jewelry box grades in the RNS. So the work has achieved a number of things. It's confirmed the extension of gold and silver mineralization at depth below the historic mine pit. It's confirmed the extension of mineralization up to 500 meters south of the mine, so along strike. And it's also provided Great Southern with the data it needs to plan its phase 3 drill program. So this is also perhaps primarily being informed by a number of geophysics surveys, which are currently underway. And they're designed to detect potential extensions of the high-grade copper-silver mineralization below and along trend of Mostaza. So really building on that potential scale already being pointed to by the drilling. So in the market, the response to the phase 2 drill results has been okay, if a little underwhelming. Great Southern rose to 3.5p this week before settling just under 3p close play on Friday. So it's currently at 2.8p with a 15.8 million market cap, which means it's pretty far off the high of around 5.2p it hit earlier this year when Mostaza's potential first became apparent. But it feels like the company's really building something here. And with phase 3 integrating geophysics to really guide the next set of holes towards the highest priority targets, I think the company has the potential to properly open up the project and delineate the true potential scale of copper and silver mineralization. And if that potential continues to build on what has already been established, then this could be a very exciting project indeed. So for that reason, I'm looking forward to getting updates on how the geophysics goes, then how the next phase of drilling goes and the results. And you got to remember, this is all happening at a time when both copper and silver prices are either at or near record highs. Throwing the fact that China is a well-established mining jurisdiction. Chile is a well-established mining jurisdiction. And it really couldn't be a more perfect time for Great Southern to be building the sort of shallow, easily accessible, high-grade mine opportunity it is at Mostaza. You have to assume a lot of majors have got their eye on it and are thinking it looks like the perfect opportunity to build up their reserves. And that obviously stands to be very significant for Great Southern from a shareholder value creation perspective. And CEO Sam Garrett certainly has form on that front. He was behind the discovery of Havieron for Greatland Gold, and we all know how that went.
Yeah, we do know all how that went. Mm-hmm. Yeah, exactly. A little while ago now. Could do with another one of those to light the sector up again in this space. But Absolutely. Those are significant grades, aren't they? Gosh, I mean, you don't see those kind of copper grades these days. You're very lucky you see over 1%, aren't you? I think.
Yeah, I mean that is the highlight. So they're not all that high, but they are.
Yeah, of course.
They're pretty good. Like they're a lot higher than 1%. A lot of them, and it's really shallow as well, which means they build a mine. It's going to cost a lot of money to get it out, obviously, but not as much as if it's much further down.
Yeah.
And Sam has said these spectacular jewellery box copper and silver grades, the best results to date.
Yeah, is that a term that's used widely? It's the first time I'd heard it.
I've never heard of that.
It's a good analogy, though, isn't it? I think it encapsulates what he's trying to say quite nicely.
Definitely, yeah.
Again, I think it's an example of a CEO just carrying on, just doing good work. I'm trying to think who else we spoke about. I can't remember. Similar CEO just sort of carries on. So it's sort of like it doesn't seem like anything special, but when you actually look into it, it is actually quite special.
Yeah, they're just cracking on. It's a bit like Barton Gold, who we've covered a couple.
Yeah, that's it. Barton Gold. That's what I'm thinking of. Yeah.
Barton Gold. They've just got a clear plan, and they just stick to it, and it's
work continues behind the scenes. They stop and report progress, and they deliver it in their own way, and then get back to work that's it. Well, that's what these guys are paid to do.
Yeah,
exactly. Well, yeah, exactly. Craig Ondo comes to mind as well, because cracking is a completely different play, insurance and tech, but just carrying on, regardless of the daily job appraisal, which is your share price.
Yeah, it must be tough, mustn't it? But you want a company that isn't moving the goalposts too much, and I think that's what we've got with Sam, like you say.
Yeah, I think so. Okay, good. Thanks, Dan, for that. It's good to hear. Finishing off the mobile streams, Alan, a suspended stock. I know you've talked about them before.
Yes, I just wanted to flag this back up. I mean, it's had up to the suspension at the end of March. It had a pretty strong year, and indeed we were shareholders. Well, we were warrant holders actually in the company, and got a very good return. But Mobile Streams is AIM-listed. MOS is the EPIC code, and they're delivering gaming content and sportsbook content to a global audience through a number of different platforms, mobilegaming.com being one of them. And they're developing relationships across South America through other carriers, particularly in Mexico through live scores and other websites and other partnerships that they've developed. So they have a group of people and a number of companies that come together to provide content, and they serve enterprise level clients over there, and also provide streams or stream software as a service, self-service platforms to game companies that might want to start their own business. And it's very much next generation content. The company has historically issued a tremendous number of warrants. And when I last spoke about the company, I spoke about the results last year. Last year, they raised 1.6 million in warrant exercises. So far in 2025, they've also raised a further 1.6 million in warrant exercises. So all that cash goes to the bottom line. So what it means is the company is very well funded, and it's used that money to develop and build its offering. January this year, the board all bought shares. So we saw Mark Epstein, the CEO, buy 12 million shares. John Barber, non-exec, bought 12 million shares. Stefano Loretti bought 2.7 million shares. Mark Epstein owns 1.74% of Mobile Streams. John Barber owns 3.5%. Stefano Loretti also owns 3.5% too. So these are guys with skin in the game. And if you're looking at buying shares in the company, this is what you like to see. I know you can't buy them at the moment, but I think given what they've achieved this year, you'll probably want to reconsider it once the shares come back from suspension. February, they launched an advisory board. So they have two directors, Paolo Fidenza, who has deep experience of fintech, M&A across South American markets, and also Alessandro Gaccini. Now, both of these were founders of a company that operates in South America called KEO World. Alessandro Gaccini is based in Switzerland. He's a senior financial executive. He's an advisor to numerous bodies and financial institutions, and they have deep expertise in this arena. Then March really was a pivotal month for the company. We saw the shares continue to rise sharply up to suspension at 0.61p at the end of the month. They announced a strategic partnership with Aquis-listed Challenger X. They also made a small investment of 25,000 into that to work with Challenger to work on projects such as Bet in Mexico. During the month, they also put Challenger X to work on their live scores site, and also during the month they relaunched mobilegaming.com as an immersive casual gaming platform to an audience across some 150 countries. So a huge reach. Then they announced the purchase of 90% of Capital Media Sports, CMS. They already own 10%, and this is the company that owns Estado Media in Mexico. And the partnership with Challenger X is now seeing Challenger X working with Estadio, and they launched the former bet website as Estadio Ghana, which is a sports book and casino in Mexico. And the shares in Mobile Streams were then suspended after the acquisition because the size of Estadio Ghana is classed as a reverse takeover. So this is ongoing. They announced a set of interims also with that suspension. Revenue of 415,000, up from 169,000 previously. This is the half year to December. Increased losses, but a strong cash position at the end of December. They have, due to those warrant exercises, 1.3 million. And also, as I said, they've already raised a further 1.6 million in warrants during this year. So we're waiting for this RTO to complete. But when it comes back, it's going to be more of the same. You're going to see further expansion into this marketplace. And this is a huge burgeoning marketplace. The revenues in the gambling market in Mexico are expected to reach some $12.3 billion this year, growing at about 3% a year, and expected to reach some $14.5 billion by 2029. So they're in a fast-growing market. They've got a very strong position once this acquisition completes, and I think it's going to be a company that's going to be worth, if you're seeking exposure to that region. It's a fast-growing region. It's, of course, one of the part of the BRIC economy. I think it's going to offer significant opportunities going forward.
Okay, interesting. Okay, and currently it's suspended. No idea when it's coming out.
No, the RTO has to complete. So that was at the end of March. I wouldn't think we're too far away, but of course, the company has continued. We've had sort of warrant exercises whilst in suspension, so further cash has been raised. So it's full steam ahead.
Okay, good. Thank you, Alan. Thank you for just reminding us what that was all about. So I think that can conclude our chat for this week. I'll let everyone get back to their Saturdays. Looks like quite a nice day here anyway. So hopefully it is with you, and we can speak in a week's time.
Brilliant. Thanks, guys.
Thank you, Mark. Thank you, Dan.
Cheers.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.